Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I know that you want to discuss a few of the major indices, the Dow, the S&P, and the Top 40, and there's quite a lot of events out there that may move markets, and yet markets aren't really going anywhere at the moment.
Well, that's right. I think there's a lot of potential catalysts out there that could move the market, but it's all very much sort of a 50-50. Which way is it going to go? And because of that uncertainty, I think there's been a large degree of sort of sitting back and waiting. So we've had, yesterday we had the decision by the NPA to withdraw the fraud charges against Pravin Gordhan. Today we're listening to the court hearing about the urgent interdict against the Public Protector report. Next week we've got the US election, and a lot of these things are sort of you're not sure how the outcome is going to look. So as a result, I think a lot of market participants are sort of sitting on the side. We've seen volumes being relatively low on our market over the last week or so, and I think that is a reflection of the general uncertainty that's out there at the moment.
And of course, our market is very rand sensitive, and in our own case, we've got political factors affecting the rand, and then US factors which are going to have a bearing on our currency. So it's a real toxic soup at the moment.
Yeah, it is. It's difficult to know exactly how it's all going to play out, and I think, and the markets are trendless, so it's very much a 50-50 as to which way things are going to go. And in that kind of environment, it doesn't make for an easy trading environment.
Well, if you talk about trendless market, you've got a chart of the S&P 500 up on screen there, and that's fairly clear, although it does seem to be trending slightly lower. Yeah,
it is. So what's notable here, I mean, we look at this chart all the time on the show, but it's, you know, I look at it every week because I still think what's developing here is very worthy of paying attention to. We've got a situation where it is by and large going sideways. It's been going sideways basically since July. But within that, you can see that there's this lateral support level at 2120, and each time the market's got down there, it's bounced off that level. But against that, we've also got a pattern of falling highs along the top here. And also notice that those falling highs correspond with the underside of the 50-day moving average. That's that blue line that's begun to take a negative tone over there. Now, I always look at the 50-day moving average as a good barometer of your medium-term momentum. The fact that it's now starting to point downwards tells me that the medium-term momentum is weak. And if I have to place my bets, I think there's a fairly high chance that this S&P 500 will actually break down, and we'll probably see it going and testing the 200-day moving average, which is down here near 2080, that sort of area.
I mean, that could theoretically happen next week even.
Well, it could, and this is the interesting thing. I mean, let's have a look at the Dow, but then I want to look at the VIX chart after that as well, and tie that into the events of next week with the US presidential election. This is the Dow Jones Industrial Average, so a very similar looking chart to the S&P 500. Again, you've got this lateral support, this time at 18,000 over here, and you can see each time the market's traded down to that level, it's bounced up. But every bounce is being followed up with a lower high. And that basically tells you that the buyers are not strong enough to push it through the breakout, and the sellers are coming in at a lower level every time. So if you have to sort of dissect it and say which force is stronger between buyers and sellers here, you would say that probably the sellers are slightly stronger because they're pushing the market lower at each rally. And again, notice how the trading activity has established itself underneath the 50-day moving average here. So again, I think here, if we do see the Dow breaking below 18,000, then that points to a move down to the 200-day moving average, which is at about 17,700, and maybe even a little bit lower. But again, as a betting man, if I have to bet which way this thing's going to break, I think the higher likelihood is it probably will break down.
I mean, use the word break, and I know that you want to introduce the VIX, which is the volatility index, because the VIX has actually been very sluggish of late, although it does seem to be moving. And what do you read into that?
Yeah, well, this got my attention this morning, and the reason it got my attention is notice that over the last 6 days, the VIX is up 31% in 6 days. So it's gone from a reading of sub 13 up to a reading of just above 17 now. The VIX is a volatility index, and it basically looks at implied volatility on S&P 500 options. Now, typically, when you see the VIX rising, that is usually associated with market fear and a sell-off in the market. And when you see low volatility and a low VIX reading, that is associated with a market that's fairly complacent, and generally a rising market will see a low VIX reading. It's very interesting that we've seen this sudden spike up in the VIX over the last 6 days in a time where the S&P 500 hasn't really done very much. It's probably traded in the S&P 500 itself has maybe traded in a 1% range over that time, and yet the VIX has pushed up by 31% in 6 trading days. Now, because it's an implied volatility reading, that is saying to you where are option writers pitching the volatility when they price up options on the S&P 500. And the fact that the VIX is rising tells you that they're pricing in higher volatility. Okay. Now, looking ahead, does this possibly mean that that the VIX is giving us a forewarning of some sort of a surprise in the US election maybe? I don't know. I mean, we'll only know the answer to that next week. But I just think it's interesting, and it perked my interest to notice that the VIX is starting to push up at a time when the market is not volatile at all at the moment.
And do you, I mean, I'm just throwing this in here, but do you look at bond yields? Because those have also been rising, and that is also quite curious to see along with a fairly static equities market.
Yeah, it is sort of a disconnect that we're seeing there as well. It's difficult to pull that back at this stage. Yeah, I could give you a long talk about deleveraging and the unraveling of the credit cycle, but we have only got 15 minutes.
Fair enough. Well, let's move on to our own index, because as we said at the beginning of the show, to some extent it's held hostage by what happens to the currency market, but it's also not heading anywhere good, it seems. Not
really. So here's our top 40 index, and again, notice we've got these flat bottoms here at 44,000, and then a series of falling tops over here over the last 2 months or so. So each rally has been met with selling pressure at a lower level. Now, again, you know, to me, the path of least resistance here probably is going to be a break to the downside. What gets my attention as well is the fact that we've been testing this 44,000 level a couple of times now. But look at the positioning of the stochastic oscillator. It's nowhere near oversold yet. It's actually just turning down from a relatively elevated level. So that could maybe be warning that we're going to break this 44,000 level and head lower. Look, today the market is up at the moment, so it's not going to happen right away. But if the market sustains this downward trend that's been in place for the last 2 months, if it peaks out with a lower high again on this next little rally, then I think be careful, because it might be telling us that a break to the downside is coming. And if we do break below that 44,000 support level, it opens up 42,000. And you may very well find that a move down to 42 would happen very quickly if we did begin to break below 44,000.
Okay. Now, I suppose the theme of this week is a look at the rand-dollar exchange rate. Yeah. And you know, as we've said, it's instrumental for our top 40. And interestingly enough, it's not been, well, it had quite a good day yesterday after the NPA dropped charges. It's kind of steady today, but do you think it might strengthen further?
I think it might. So let's have a look at the chart and see what the chart is telling us. This chart is the rand-dollar exchange rate, and it's basically giving us the trading action for the whole year to date. So you can see January 2016 there, where the rand was at its weakest levels. Ever since then, it's been strengthening in this quite well-defined channel structure. Now, within that, what I see over here now is a triangle pattern, and typically a textbook triangle pattern has 5 waves in it, and it usually breaks on the 5th wave. And it's a continuation pattern. So if you find a triangle that forms in an upward trend, you would expect an upside breakout. If you find a triangle that forms in a downward trend, like this one is, then you would expect a downside break. There's typically 5 waves within a triangle pattern, and in my experience, the most reliable triangle patterns break out approximately 2/3 of the way into the apex of that triangle structure. So there's some of the theory to think about. But if we look at this one, notice we've got wave 1, 2, 3, 4. You can see them labeled there, and now we're on the 5th wave. If we start to break below 13.50 Rand on the rand-dollar exchange rate, then it validates that triangle structure. And you can see, look where it's breaking out. If I had to project these green lines out into an apex point, the breakout's probably going to happen around about 2/3 of the way into the structure. So if we see a move below 13.50 Rand to the dollar, then actually that is a very powerful technical break for the rand, in the sense that the rand would get stronger. And that will take us down to, I think, look, below 13 Rand to the dollar. But actually that triangle structure points to a move down to about 12.20 Rand to the dollar. So if that is the case, and if my analysis here is correct, then that is going to be a big headwind for our market, because it is such a currency-sensitive market.
And I suppose the catalyst could be any number of things.
Well, it could be any number of things. It could be the fact that maybe we don't get a downgrade in December, who knows. But also something I've noticed about the Rand is that it seems to have a desire to want to go stronger in the absence of any political noise.
Yeah.
So whenever the political nonsense goes quiet for a few days, notice that the Rand just gets stronger. And it's almost like there's a force buying the Rand. And every now and again we get someone that says something stupid or does something stupid, and then obviously the Rand weakens briefly. But it's short-lived at the moment. And it seems as if the path of least resistance for the Rand is for it to go stronger in the absence of any political nonsense.
Because we've had plenty of political nonsense in the last 3 weeks that has been equally troubling to what we experienced at the start of the year when the Rand seemed to blow out. But as you actually can see there, we've strengthened ever since those dark days of late January. We've
strengthened significantly this year. I mean, we were at 16 Rand 50 to the dollar in January. Now we're at 13 Rand 50. So the Rand is, is getting close to 20% stronger on the year.
Garth, and just quickly, you mentioned if we don't get a downgrade in December, so that chart action, would that take into account maybe, another sort of 6 weeks, 2 months worth of trading?
I think so. Look, your currency also does look forward. All markets look forward.
Yeah.
And I think what all of this is telling you, the fact that the Rand does seem to have this desire to go stronger, is maybe that what shall we call them, the naughty forces within the political circles are maybe not as strong as they think they are. And maybe good will prevail in the end.
So euphemistically put, Garth, and just remember or remind us how this maybe ties into the option structure that you have, because you're kind of positioned on both sides of the market.
Yeah, you could say I'm sort of sitting on the fence, I suppose, but I am. We've got a bearish option structure which gives us downside participation if the market should fall, but I also did buy a couple of all-me futures against this a few weeks back. So in essence, that green, those sort of green shapes on the right-hand side of the graph there show you the payoff profile of how our option structure, together with these all-me futures, will look. Come the December futures closeout, which is in the middle of December there, I think it's the 15th of December if I'm not wrong, that's where the option structure would expire. And you can see the different strike intervals there, what we would make. So for example, at 43,000, we'll make 13,000 Rand on our option structure. At 45,000, we would make 8,300 Rand on our option. And I've just labeled them there with different 2,000 point increments to show you. Effectively, we'll make money wherever the market ends the quarter. I'm kind of gunning for it to go a bit lower, but we'll make money one way or the other anyway.
Yeah, but it would be nice to make the maximum, I suppose, of either structure that you have on for the portfolio.
Yeah, indeed.
And then how does the portfolio look? Because you've marked it to market, and so it actually is quite flattered by what's been happening to the market recently.
That's right. Because the market's come off a little bit, it means that option structure has been making money for us. So we've gone beyond the 300,000 Rand level. So we're sitting with 305,000 Rand in the portfolio. That's up 22% for the year to date. And there you can see the positions that we've got open. So we've got the put spread structure over there, and then we've got 5 long all-me futures from 45,720, which I'm still sitting on. So together, the whole lot is profitable at this stage, and our portfolio's had a good week as the markets come down.
Yeah, and it's a busy month for you guys, a lot of courses this month.
Yes, November's going to be a busy one. So I'm in Johannesburg on the 19th of November and in Cape Town on the 26th of November doing a high probability trading course, and my colleague Andrew Todd is doing a top 40 trading course on the 12th of November in Joburg. So anyone that would like details on any of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
And of course, they could also subscribe to a weekly email alert.
Yes, that's right. So if you'd want to see what's coming up on this show every week and get a little bit of a heads up, we send out a free weekly email every Tuesday. All you need to do is go to traderscorner.co.za, and you can click on that link in the middle of the page there that says free weekly email, enter your details, and then we'll add you to the mailing list.
Great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.